Everyone, and thank you for joining us today for our Chartered Insurance Institute webcast with Flaxman Partners. I'm Carly Knight, Professional Development Manager at the Chartered Insurance Institute, and I'd like to welcome you all to our session on demands and needs, what to know and why it matters. Now, Flaxman's first CII webinar of the new year explores the often confusing and occasionally overlooked FCA requirement that the customer must be provided with a statement of their demands and needs. And this will help you unpick the salient features of ICOBS 4 so that you will know your procedures are compliant with FCA expectations. As usual, and many of you already know them, we have with us online today Roger Flaxman, Chairman and Principal Consultant, and Michael Wilson, Director at Flaxman Partners, who will delve into this topic in finer detail for you. There will be questions at the end of the presentation, so please feel free to use the question box you can see on your screen, and we will work through these once the webcast is complete. So without further ado, I will hand over to Roger and Michael. Thank you.
Thank you, Carly, and good morning and welcome again. I'm Roger Flaxman, and with me as ever is the indefatigable Michael Wilson. So, the mere mention of FCA regulations tends to send shivers down the majority of our spines. And of course, we recognise that the day-to-day life of most of us doesn't include reading ICOBS or PRINs or anything else. We tend to think that we're all doing it right and everything is compliant with regulations until someone comes and tells us otherwise. Sadly, that is often at the moment that somebody arrives with some bad news that there's a complaint about something we have or haven't done. Accompanying this webinar is probably one of the most detailed fact sheets that we've ever written, because this is quite a big subject. In our opinion, it goes to the very heart of insurance practice. And we'll say it again later, but you will be able to get a copy of the fact sheet from us. It will be on our website. And I think that Anthony Dallison, who's the MD here, will probably send it out to everybody that's attended anyway. But I'm just going to quote just a little passage from it because it kind of sets the tone. The typical customer or client relies upon the integrity of the insurance contract sold to them. A, in the belief that they have the legal right to do so, and B, believing that the insurer knows better than they do what cover is ordinarily needed to meet a typical policyholder's demands and expectations. Consequently, the typical customer, being unaware of the commercial dynamics of insurance markets, will usually not understand the scope of cover well enough to know whether it gives them the protection they need. They often don't understand their own needs or what demands they should make. Now, we're saying that because we've got between us 50 years experience of dealing with these things in practice. And this is what people tell us, when they're saying, well, this is why I'm complaining and this is my case, blah, 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 blah. So we're pretty confident that that is actually the way that these things pan out. We also find that a good 50% or more of the complaints that concern policies are usually to do with there not being the cover they expected when a claim is occurred. Now, in practice, when we look at these things for people, usually defending the, well, sometimes defending the insurer, sometimes the broker, sometimes representing the client, but whichever way we look at it, one of the first things we go to is the proposal form, the application form, and the demands and needs assessment, because that is the root. It's not the policy, it's what is actually the root of the insurance, is what was said between the two parties before the contract was made. So we ask ourselves, did the policy meet the demands and needs, and if not, why? Now, of course, sometimes demands and needs are met by the policy, but a breach of condition or an exclusion might give rise to there being no cover and hence the complaint. But the demands and needs statement and assessment, or test, which is referred to in the ICOBs, which we'll come to later, is the central starting point of whether or not most complaints have any merit. Today, we're going to attempt to give you a really clear explanation of what demands and needs means in practice. In other words, slightly interpreting what these regulations say, and how ordinarily, as any kind of insurance practitioner, you can import their aims and objectives into your daily insurance work and practice. Just one correction. I heard Carly talk about ICOBs 4. That should have been ICOBs 5, but we'll come. But we're not talking about ICOBs 4 at all today. It's ICOBs 5. But anyway, look forward to speaking to you later. I'm sure there'll be lots of questions, and we'll try and leave enough time to give you a good hearing. Michael, over to you.
Thank you, Roger. As usual, here are the learning objectives, which were circulated previously. I'm not going to read through them. I'll just leave them there for a minute or two. This is the ground that we intend to cover. So coming on to the FCA regulations. Now, Roger has already referred to the fact that we've issued a very detailed fact sheet. So please don't worry if the way that we rattle through these slides leaves you behind a little bit. What we want to do is we want to highlight one or two aspects of the regulations. So I don't know whether you keep notes, but don't worry, because what we want to do is to go through the technical aspect of the regulations fairly quickly, because Roger and I have want to introduce a couple of examples to show what happens when things go wrong. And we want to leave as much time as we can to discuss some practical issues that arise when perhaps the demands and needs have not been adequately established at the outset. So our starting point is that the regulations require that the insured's needs, whether the insured appreciates what their needs are or not, are to be met by the policy that's arranged in their name. And to achieve that objective requires clear and specific actions of the insurance practitioner, or otherwise known as the firm in the regulations. Now, that's just to flag up where you can find the regulations, but again, that will be shown in our fact sheet. It's not everyday reading for most of you, but at least you know where to go for the actual regulations. One part of the regulation says that the firm must take reasonable steps to ensure that a customer only buys a policy under which he is eligible to claim benefits. Now, that might sound like a fairly obvious statement, but there are times in our industry when this goes wrong. And I know that the FCA some time ago was very concerned about retail banks offering package insurances to their customers for a monthly fee. And sometimes it was found that some of the cover was totally irrelevant to the customer's needs. And I think another recent or fairly recent example of this was the sale of payment protection insurance, which commonly became known as PPI. And a lot of these insurances were missold. They were typically sold alongside a loan or a bank mortgage. And the idea of the insurance was to compensate the client so that there was a payment available to cover the loan repayments in the event of sickness or redundancy. But it turned out that these policies that were sold wholesale, willy-nilly, without an establishment of the customer's demands and needs, a lot of them were totally inappropriate and overpriced and very poor value for money. So that's the best example I can think of policies that were sold that under which, in many cases, the client could never have claimed. The guidance issued in the demands and needs should be on the basis of information obtained from the customer. Now, moving on, because this connects to the next slide. The overarching issue here is that the demands and needs statement requires beforehand an assessment. So first of all, there has to be an assessment. And then in the majority of litigation cases that we come across, there's no evidence of that assessment having taken place. But just before, Roger, I'd like to ask you just to comment briefly on some of the problems that we see here. The general rule is it must be personal and specific, but there's also a little bit of a trap, you might call it here, because it says that the statements of demands and needs must be communicated to the customer prior to the conclusion of the contract of insurance.
Yeah.
And I must confess, I very rarely see a statement of demands and needs that's issued any earlier than the issuing of the policy itself. I don't know if that's a particularly material issue.
Well, it only becomes an issue when there's a complaint. In other words, I think we can fairly say that most of the documentation sent to the insured is never read until they have a claim and they have a complaint. But the point is that the regulation says that the demands and needs, a statement must be communicated prior to the contract. In other words, prior to the insured saying, go ahead, you've got an order. And if it isn't, then I'm afraid the sender of the information could be on the back foot straight away because it's a breach of regulation. And what it does, it deprives the insured of saying, hang on a minute, that is not my demands and needs. In fact, I've got a case at the moment that I'm running with where exactly that has happened on a matter concerning cladding, an insurance cover in this respect. And there is no doubt whatsoever that the demands and needs assessment, in this case, and statement, is proving to be inadequate because nobody really thought about it very much and certainly never went back to the insured, who was a complicated, quite a big and complicated bit, never went back and said, look, this is what we're telling the insurers about your business. Do you agree? Nobody did that. And now the claim has come along and there's an absence of meeting of the minds. It's quite clear that the fact that the statement wasn't concluded and sent to them in advance is the root of the failure, in this case, of the insurance to meet its objectives. It's quite common.
That example you quoted was a complex example. On the face of it, these requirements, these FCA requirements, are very demanding in terms of issuing a statement of demands and needs preceded by an actual assessment. But I think I'm right in saying that when it comes to low cost, high value, high volume, low value business,
yes,
it is possible for the firm, whether it's the insurer or the broker, to issue a slightly more, what you might call, generic information.
Well, you have to because of the practical context of doing it. I think that the demands and needs and the high volume, low value has a special problem associated with it because, for example, if you're looking at householders, if you say we're selling you a policy which we think meets the ordinary needs of an ordinary householder, probably true most of the time. The problem is that the kind of things that will come up is the householder is quietly running a business in the background or in the garage, and particularly since the lockdown, a lot more people are working from home. And some insurers are saying, you didn't tell us that, you're out. We had a case a little while ago with a motorcycle enthusiast who started doing a few things for himself, then his friends, and then started charging people to do it locally. And this was all being done within the house, within the kitchen, within the probably other rooms as well, and certainly within the garage. And they had a fire when some petrol that he was transferring from one thing to another caught fire. And quite understandably, the insurer said, didn't tell us this. This is highly material information. And demands and needs assessments don't take that up. That's a problem to be addressed. I'm not offering a solution to it. It's a problem.
Yeah. So this is the test, and it says here that a firm must ensure the policy meets the needs of the customer, whether advice is given to the customer or not, and that the insurance must be accompanied by a demands and needs test. Now, we quite often come across cases where a policy has not met the demands and needs of the customer, but the provider of the insurance has said, oh, well, this was an execution-only transaction. In other words, it was non-advised. Yeah. And sometimes there's an assumption that on the part of the firm that there's no need to go into any of the detail of the contract. It's as if they're saying, buyer beware. But of course, that doesn't always, that's not always correct. And the general rule is that even if you're transacting business on a non-advised basis, it's still necessary for you to, first of all, provide information on the contract, provide information on the insurance that's on offer, and secondly, be satisfied that you've provided enough information to the buyer for them to make an informed choice as to whether or not to go ahead. And that's an aspect of non-advised sales which is often overlooked.
Yes, it is, yeah. I think it would be very easy, particularly with the facilities we have in communication, social communication and internet generally, for insurers and indeed brokers on high volume, low value business to say, this is the demands and needs assessment we've made for an ordinary householder or whatever it is, even a very, very small business. But these are the kind of things that an insurer would require you to tell us about. And if you do that, it adds a huge amount of value to the sale proposition. Because if you say, look, here are 10 things that we want to know, like running a business in the garage or whatever, whatever other things the insurer wants to come up with, just putting those in front of the consumer will do so much to contribute to the aims and objectives of the demands and needs test.
I suppose to some extent it's fair to say, Roger, that horses for courses, that the extent to which inquiries are made and records kept, it must vary depending on the complexity of the insurance that's being advised on. But I can understand a number of delegates on this webinar today saying, well, it's all very well saying that you've got to make these inquiries, make an assessment, keep records, issue a specific demands and needs. We simply haven't got the time or the resources to do what you're suggesting should be done.
Yeah, it's one of the reasons we're doing this webinar. Yeah.
Well, I think the point that we've put on this slide is that failing to do so can give rise to complaints and claims against the firm, which are consistently more costly and time-consuming. So it's an ever-present balancing act, isn't it, between the two? That you know that if you get it wrong, you might attract more complaints, and that takes up a lot of time. And claims under PI insurance and what have you. Yeah. So it's a matter of getting that balance right, I suppose.
Yes, and I think it is exactly that. This is a commercial issue for the company to say, well, are we bothered until it happens? And that's very much the attitude that some people take. It's not the attitude the FCA would take, I hasten to add, but we've got to live in the real world, and there isn't the time to do the thoroughness that is technically required. It's a question of how we deal with it.
So this brings us down to the subject of record keeping, which is also included in ICOBS 5, Roger, and a firm must make a record of the suitability assessment. Now, you've dealt with a number of expert witness cases where you've had to express an opinion on a firm's performance and record keeping. So from your experience, what sort of record keeping would you expect to see from a firm that's capable of defending satisfactorily a claim made against it?
Well, the short answer to that is there's got to be enough information in a form that a competent, independent third party can read it and understand what went on. Now, a competent, independent third party is probably going to be a lawyer or a loss adjuster, but somebody who won't have any knowledge of the insured or the firm that's issued the insurance. But they've got to see by reading the records, well, it's pretty clear what went on. And sadly, one of the big problems with modern technology records is almost everything is done in a kind of short, jargonistic note form, which means something to the people in the firm that have written it, but very little to outside. And because it's in like that, it gives rise to enormous amount of interpretation. So in our lives, when we're dealing with these things with a sort of a legal context, lawyers have a field day and saying, well, it could mean this, it could mean that, and it could mean so-and-so. So let's take the meaning that suits us best. So the answer is, and I'll say it again, there's enough for a competent, independent third party to be able to read it and know pretty accurately what went on. And that's a question of how you style your record keeping and what you insist or you require your staff to do. It's an enormous problem. Again, I don't have an easy answer to it, but that is the answer to the question. It's quite detailed.
Thank you. There's a section on the fair analysis of the market, and the point made by this rule is that where usually an intermediary claims that it's going to make a recommendation based on an analysis of the market, that it must be an analysis of a sufficiently large number to justify that claim, or possibly making a personal recommendation on the basis of a fair and personal analysis. I suppose this leads to the question of how comprehensive does that search of the market have to be? We're not dealing with intermediaries that are tied to any one provider. So we're looking at intermediaries with if you like, with more than one agency. But is it sufficient for a fair analysis to be made if there's only 2 or 3 insurers at their disposal?
Well, I've got a case
at the other end of the spectrum. Are we expecting them to review what's available from 40 different providers?
Well, this is the point. I'm dealing with a real case at the moment where exactly this point has been made, and the other side have said, look, there are 23 insurers out there in the market regularly offering cover for a firm like us, and you saw 3. What happened to the other 20? Now, the answer, of course, is, oh, well, we only have an agency relationship with 3. And the answer has come back from the other side, well, in that case, you're not a broker. I'm not going to pass judgment on that because I know that it is very much the way the business is. But the answer is, it's going to be difficult to persuade anybody outside the 2 parties that that was a fair analysis, because it's quite clear that out of the other 20, it has been established by expert evidence that at least 3 of those other 20 would have given the cover that the insured was deprived of by the party that was actually issued the policy. That's the way.
I think I'm right in saying, Roger, that there have been some cases where a brokerage has employed what you might call marketing puff in their terms of business and on their website, that in actual fact has overstated the extent to which they represent the whole market. So
if is absolutely right.
If there's any concern on that, sometimes it's better off just toning down the marketing a little bit to reflect the reality.
Well, it's increasingly common, in fact, particularly in the last 2 or 3 years, that lawyers are looking very closely at the difference of what practitioners say in their website and what they say in their TOBAs, because often there's a big mismatch. And the promises and exhortations that are made in the website can lead people into very serious trouble, because very often they can't match up in practice to what the implications are in the marketing puff. So that's a really good point, Mike. It's really well worth looking. And when I say this, never look at your own stuff and think, oh, that's all right. Get an independent third party to read it and listen to what somebody from outside says. Here's what I say in the website. Here's what we do in practice. How big is the gap? Useful stuff.
Right. So that's been a rapid review of ICOBs, and I don't blame anybody for not having kept up entirely, but as I said before, our very, very detailed fact sheet goes into a lot more detail than we've covered this morning. So we do encourage you to download that when you receive the link. I've tried to leave as much time as possible for a couple of examples, and here's the first one. Roger, could you lead us through this one?
Yes. Now, all of the examples we give, just to make it clear, are based upon real cases, because we don't need to make them up. We see enough. And this is based on a real case of a couple of years ago. This was the case of a quite long-standing and experienced heating and ventilation supply and installation company. Unsurprisingly, they were courted by brokers quite often to say, can we quote for you? And eventually they said yes, and they acquired a new broker and a new insurer, and they supplied the information to the broker and onto the insurer using a modern platform. Now, and that's important, actually, so just bear that in mind. In over 25 years, this insured had had a successful business, and they'd had virtually no claims other than a minor material damage claim to their head office and 2 or 3 small motor fleet accidents. Really nothing to worry about. They were a good record. Now, in the schedule to the policy, the business was described as heating and ventilation supply and installation. In the first year of the new policy, they had a claim, and the claim was made by a customer for losses arising from faulty installation of ventilation equipment in a temperature-controlled warehouse. Now, the claim was repudiated almost straight away on the basis of misrepresentation of the insured's business. The claim concerned faulty fixings of the equipment to the vaulted ceilings in the warehouse. Now, the fixings had to be especially made for the contract because the fixings just had to be capable of being fixed to the surface of the warehouse. And that was described by the insurers as design. And you said you were supply and installation, no manufacturer, and therefore we don't have to pay you. That was the claim. So the inquiries into the nature of the business afterwards, and this is where we came in, we had a look at it. There was nothing in the demands and needs assessment that went close to establishing anything more than that very brief description. Now, it turned out that this company had a reputation for working with some big contractors, a good reputation for working with these people because they had the ability to, if you like, do design. In other words, they could put anything almost anywhere and it was reliable. So actually, design was quite an important part of what they did. But that wasn't established in the demands and needs assessment. and there were very few records with the new broker because this was all done in a hurry. I think it's 2 weeks before renewal, and it was more a case of getting it on risk. And the insurer, in my opinion, was right to say, I'm sorry, but we didn't know they were involved in design, and had we known so. Now, the interesting thing was that the insurer was a public liability insurer with products extension. In fact, they really needed a PI policy, but nobody thought about it. So again, the demands and needs had simply not been properly assessed, but they did receive a demands and needs statement.
Roger, I had a break in the internet for a little while. I might have missed this, but sometimes this, rather than being a misrepresentation matter, can be a problem to do with an exclusion in the policy for design.
Yes,
and it's not uncommon. It's not uncommon for a PL policy to exclude design for a fee. And
yes,
quite often, so for instance, if you take a plumber who's installing a new central heating system, and he finds that one of the connections isn't really up to scratch, so he adapts the connection or invents his own washer or adapts the system otherwise to make it work.
yeah.
But that's all part of the fee that he estimated at the outset. In other words, he's not doing that for an extra cost. If the insurer says, well, wait a minute, your adapting of that system constitutes design and there's a design exclusion, to what extent can the policyholder argue that that was not designed for a fee because there was no extra fee charged?
Well, look, there are two issues there. The first one is, can he say that it was designed? And the answer, yes, he can say it. But in my opinion, I think that a competent insurer of plumbers would know that very few plumbing jobs are straightforward. And actually, the best plumbers have got the ingenuity to say, we need to do it like this, mate, because actually that will work and that wouldn't. Now, therefore, I think that that kind of design is a necessary and ordinary practice in that context of plumbing. So you could argue that what was it as the insurer that you didn't understand about a plumber's job? Now, I could expand that argument, but it would take about an hour to do so, because I've used it before, and it can work. There's always two sides to a story, and I think it's unreasonable to say that any sort of minor deviation constitutes design. So set that to one side. Now, the question of the fee is actually a very good one. The point about the fee, if somebody enters into a contract to do a job, and they say, well, I'm going to charge you, just say, £5,000 for the job. Very often in the course of jobs, somebody says, oh, I think we want to make a change to that, or we want to make a revision in the specification. There's thousands of reasons why customers eventually say, well, can you just? Now, the question is, does the contractor say, well, I'll do that, but I'm going to charge more money? Or do they say, well, if I charge more money, I won't get repeat business, so I'll just do it and suck it up? Because if he does, then there's no fee. But the point is, this is it's a moot point to the extent that if the fee is not explicit, is it implied in the contract? And so you really do need to understand both sides of the equation of what is the intention of that clause, that condition.
So, Roger, bearing in mind that we're talking about establishing the customer's demands and needs,
yeah,
you could argue that anybody providing liability insurance, either to a plumber or a builder or any contractor, ought to at least have the subject of design on their agenda to discuss.
Yes.
Because at the moment it probably isn't, to be fair.
No,
because
it isn't.
in the cases that we've seen, this this problem to do with design usually comes as a very unpleasant surprise to everybody.
It does. And the other problem that comes up is workmanship. You know, what is workmanship and what is bad workmanship? And I've got a case at the moment where the workman has said, well, we had to work out what to do because there wasn't enough specification in the design. So we got there, we got to do the job, and we had to work it out for ourselves. And that's now being regarded as bad workmanship. I mean, these are immutable problems. And I think that coming back to the demands and needs, I would say that any assessment of a business that does anything for a customer of this kind, it requires somebody to think about, is there any design? To what extent is there? And make it explicit. But what I'm coming back to the platforms, the platform in the case of the ventilation didn't give any opportunity, drop-down boxes or otherwise, for a narrative to explain it. And originally, even the broker said, well, the underwriter didn't ask the question, so why did I need to tell him? You know, so we've got it's a lacuna here, and this is all coming about because we're moving further and further away from the client and relying upon technology to think for us. And it's not sophisticated enough yet to do so.
But at the same time, Roger, there's still an underlying requirement to know the customer, isn't there?
Absolutely.
Which is what this is all about.
Absolutely. Yeah, yeah.
Right, moving on to a second example. This is a domestic one. We had a client who went abroad for 5 years to take up an employment contract, and so he decided to let the property. And unfortunately, I think it was around about the 4-year point. He'd been away for 4 years. At the 4-year point, there was a serious fire at the property, and the slide here has got the word cannabis, so we all know what was going on. That the tenants had decided to cultivate cannabis on the property, and this led to the serious fire. And unfortunately for the policyholder, this particular policy has an exclusion relating to damage caused by anybody lawfully on the premises.
Mm-hmm.
And it was established that the tenants were paying their rent, and so therefore they were lawfully on the premises, and the claim failed. The reason that I've chosen this example in relation to establishing demands and needs, it raises the question as to how much inquiry should there be when either a client approaches a firm and says, I've got to let property, or it might be an existing client who says, I'm going abroad and I'm going to let my property. How detailed should the inquiry be in order to establish the demands and needs of the customer? Because as soon as you have a let property, it raises all sorts of issues, such as is there a letting agent involved? And if there is a letting agent, does he have an obligation to inspect the property internally at least once a year? And in fact, you might find that a standard let property would have that in as a requirement anyway. What sort of tenancy is expected? Is it going to be a 4 or 5 year tenancy with one tenant? Or is it likely to be a series of 6 months lets? Because the trouble, if it's the latter, to what extent are we anticipating periods of unoccupancy, especially during the winter? And what precautions are being taken to either comply with policy terms or to minimize the risk of a claim? So this is why I think this is a very good example to highlight that establishing the demands and needs sometimes requires a little bit more inquiry than you would normally expect for this class of business, because you would expect anything to do with domestic property to be fairly straightforward. We know that as soon as you let a property, there are additional risks, but sometimes those questions are not posed. And I think again, a question for you, Roger, that if the firm was coming under the microscope, perhaps a lawyer was alleging that in this case, a broker had been negligent in not asking enough about the client's circumstances, do you think that would be a problem for the firm?
Well, I mean, it could very well be, but it doesn't necessarily mean that the questions asked by the lawyer were entirely reasonable. The fact is, they've got the right to answer them, and you have the obligation, to ask them. You have the obligation to answer them. I think the problem here, Mike, is that, again, this is a problem that has arisen more as technology has taken over the delivery of our services, because the range of things that can happen in a letting are enormous. And as you know, we're seeing more and more cases where we're dealing with right to manage companies in blocks of flats, and the gap between what the right to manage company takes on as responsibility and what the managing agent takes on responsibility when you're talking about managed properties, it's enormous. And we're doing some very detailed work on the liability effects of this thing, because it is actually, it's unknown territory in the industry at the moment. So going back to the point here is that fundamentally the insurer that takes on a property that is let will ordinarily know that the risks are increased enormously, to the extent that most tenants don't look after a property in the way that the owner does. I think you can say that that's it. What we also know is that quite a lot of tenants will sublet without telling anybody. The idea of having cannabis grown in the loft, I mean, it's not a new idea. A lot of people have done it, and we've seen quite a few of them. And I think the point here is this, that coming down to demands and needs assessment, I think it would be very difficult to do a demands and needs assessment that meets all the if you like, the probabilities in let properties, without having some kind of agreement as what it is that the insurer wants to know. And I think that a market, agreement on actually the housing stock that is let, we really want to know these things. And if you're presenting a fair presentation of this will include and have a list of things that you have to ask the client what his intentions are. Now, a client may tell you on day one, my intentions are this, and they may change during the year. And that's another reason when you actually send out the demands and needs statement to say, based upon what you've told us here, this works. But if any of these things were to change, you've got to tell us, because otherwise you may have no cover. And it's just a communication job.
Yeah, thank you. I've put up a summary slide there. I'm not going to read through it, but Roger, I'm just going to ask you a question that we haven't rehearsed.
Oh, my word.
And haven't discussed amongst us, but so forgive me for doing this. But take an ordinary home insurance policy that comes up for renewal. So a statement of demands and needs was issued with the new policy the previous year. Is it expected and required that a new statement of demands and needs will be issued at renewal?
What, every year?
Yes.
Technically, yes. Because it doesn't say...
Because this is a risk that you, unless the client says something, it's a risk that you don't expect will have changed much.
One of the biggest problems here, and I can say this goes back to my early days of insurance in the 1970s, before most of the audience probably were even thought of, yet alone born. But I remember somebody, the company I worked with at the time, saying, young flaxmen never believe a renewal is a renewal. Now, that's a funny thing to say, but what he was saying is that we call it a renewal because it's a convenient jargon thing to say, but actually it's a new contract. And there's plenty of established law and practice to say that every annual contract is a new contract. The problem is that the industry has invented automatic renewals, and that's for all the reasons I don't have to rehearse here. The problem is that the client doesn't understand the nuances of what a new contract is, and unless you tell him, he won't think about it. So in my opinion, it would be sensible, even if you're not going to have an application or proposal each year, actually to have something which is, here is a demand and needs assessment that you gave us in whatever year, and please confirm to us that these things are all the same, because it's the best protection you can get is to bring to the attention of the insured the things that you are relying upon for what they have represented to you. And unless you ask them, put it in front of them, they won't think of it. They'll just assume this is a renewal, it's the same as last year. So I don't know if that answers your question, but that's the way I think you've got to look at it.
You've passed the test, Roger. Thank you very much. Carly, over to you if you've got some questions there.
Yes, we have a few questions, or we've got a question and then some comments that you might want to kind of have, or you might have a response to. So let me start first of all with Mandy. So she says, why are we not using a quotation system where a number of insurers are providing comparable quotations? Should we be recommending on the basis of a panel rather than a fair analysis?
Well, I would have thought a panel would normally fit the definition.
Yeah.
Roger?
Well, if I've understood it right, in other words, you're using a quotation system that automatically includes a wide representation of the market. If that's what you're saying, if it is a wide enough representation of the market, I think you're right. It's a question of numbers.
Great. Thank you. Someone has mentioned, so Richard says, with personal lines, the demands and needs is never sent to the insured before the contract commences, but there is a cooling off period. Can you comment on this?
Yes.
My thought on that is that it might not, strictly speaking, be in accordance with the rule, but I would have thought it would be enough, because it's giving the recipient of the cooling off notice and the recipient of the policy details that opportunity to double check that it meets their demands and needs.
If they read it.
Would you go along with that, Roger?
I would, if they read it. I think this comes to the other problem, is that we know from practical experience that most people don't read the stuff that is given because there's too much of it. It's just too much to read. And we've had this time and time again. And of course, this is one of the things that was commented on by the court in the FCA litigation, that there was too much to read. And so I think, again, simplicity is the order of the day here. And if you want people to pay attention to something that's important to you as the insurer and or the broker, then bring it to their attention in a way that it's difficult for them to ignore it. I still think, and I know we've discussed this before, that there shouldn't be an insurance where the insured hasn't had to read and agree something that confirms his understanding of the contract for the following year. I know that adds time and cost, but looking at it from where we sit, which is when things have gone wrong, what are the defences? There's no better defence than say, well, the insured did read that. He's presumed to have understood it. He signed it. And we don't get that.
Okay, thank you. Sarah asks, I understand that the rules state if the sale is conducted via distance means the D&N statement should be sent immediately after conclusion of the contract. Is that correct?
Let's say that again, would you?
Yeah, so I understand that the rules state if the sale is conducted via distance means the demands and needs statement should be sent immediately after conclusion of the contract. Is this correct?
Well, I'm going to have to pass on that because I'm not sure what the rule is she's referring to, but it sounds as though it might be right. And in which case it's something we'd have to think about, well, what are the implications? I haven't looked into that specifically, so I'll have to pass on.
Well, as normal, we will follow up this question and answer session with a compendium of the questions and answers, and we'll look that one up.
We'll check
because
that
I don't
out.
know the answer to that one either.
No.
Okay, great. Thank you. Alice says, why don't we encourage clients to sign and date demands and needs statements to protect us as a broker?
Well, that's what I've just said, and I agree with her. Yeah,
Okay.
I think that's a smart thing to do. The more you can do to get your client to engage in something that's important to you, which is protecting you, the better it should be. But I do think that simplification of these things is the order of the day. Don't make it too complicated for a client to read a whole load of guff. I mean, I will say this, in putting this webinar together, which I think is important because it goes to the heart of so many of the things we deal with. I know how difficult it is for the majority of people in our industry to read just the ICOBs, let alone all the other stuff, and understand what it means in practice. I know how difficult that is. And we understand the business. Policyholders, they've got no interest whatsoever in insurance until they have a loss. And actually, most of them haven't got a clue what their needs are, or let alone their demands. And if we are going to serve the public with insurance, we really do have, I think, an obligation somewhere along the line to communicate with them a lot better than we do. And we've got so many opportunities. I did read something the other day, which I was really impressed with, actually, and I'll say so publicly. It was an Aviva publication concerning motor insurance, and it was a really good description, amongst other things, of what is meant by modifications to a car. And I thought, that's good. And we could do that on almost any subject. But I also know that there is another broad opinion abroad that says don't put things like that in writing because it can be held against you in a court of law. Well, I'm sorry, I don't think that's a good enough reason for not communicating important things to the public. It's nonsense. What the public want to know is they want to be able to rely upon the integrity of an insurance contract. And to do that, they must understand what the insurer actually wants, what's important to them. Now, the Insurance Act 2015 tried to make that clearer and to balance up the equation between insured and insured. But still, in my opinion, I know Mike and I agree on this, that there's still far too much of this is a game and see if the policyholder can beat us at our game. That is a culture which does exist in some parts of the industry. And particularly, I'm afraid, when it comes to a claim, some people say, well, they've got to get past me to get this paid. It's not really good for the industry or for business. And to overcome that, all you need to do is to have websites which say, just take the housing situation. What is a householder? What actually are the demands and needs of an ordinary householder? More importantly, what are those demands and needs that the householder wouldn't think of, but the insurer would? Why not poke them up front and say, do any of these apply to you? Because if they do, I was talking to somebody the other day, it was over the weekend, who lives in what I call a comfortable 5-bedroom house somewhere down in Devon. And they have a problem because they have erected in their very big garden a yurt. And apparently the erection of the yurt has nullified their household insurance. And the reason for that is that the insurers said, well, had we known you had a yurt in the garden, we regarded you as a business, not a householder. Now, never mind the argument, but how many other people have got yurts or caravans or other things which they let out? And they would never think about telling the insurer about it. But it's the kind of stuff that if you publicise it, make it sort of a general information thing that goes out about household insurances and small business insurances and things. These people rely on us. They think that we know more about insurance than they do. And all we've got to do is to just be upfront about it and not be secretive. So I don't know if that helps or not, but.
Great, thank you, Roger. Okay, Amanda asks, how can you be sure of the quality of the demands and needs if you don't actually speak to the client?
That's probably the most brilliant question. The answer is you can't, can you? No, you can't.
Yeah.
I mean, this is a problem.
Our business is getting more and more impersonal, isn't it? And
yeah.
An impersonal way of transacting business is, on the face of it, more efficient and more cost effective. But it's sometimes it's at the expense of clarity and understanding. Mm.
Yeah, and I think this point is that if the industry has no regard for the benefits of the thing they're selling, in other words, they don't really care as long as they've sold it. I'm not saying that is what the industry says, but there are some practitioners, as we know, that will say, I'm not worried. You know, I'm selling the policy. My job is to meet my targets. If that is the culture, well, you can't rely upon it. There's lots of information going around at the moment about people beginning to be worried about AI. And I was listening to somebody only the other day saying that they'd done some tests, this is on insurance matters, with ChatGPT and AI, and these are university standard tests, and found out a lot of information that they, knowing what the answer is put into these things, came out fundamentally wrong. But if the public did it, they wouldn't know it's fundamentally wrong. And this is why I think the opportunity to really increase our profile with the public, it might separate the transactional side of insurance from the advisory, but there's a huge need for good, thorough, reliable information to be imparted. And if you think of all the traffic that goes out over the internet and through social media, that actually is pretty worthless, if some of it of really good value could be catapulted out by the industry to the general public, it would do us so much good. It's, that was a really good question. The answer is it can't.
Roger. Okay, we've got time for one more question. And then, like both of them said, they will come back to you with any responses as usual. We'll make sure that we get all of the replies out to you for those of you that we haven't got to. But Alison asks, should an intermediary always rebroker at renewal? And if they don't, should they confirm in the demands and needs that they have only approached a single insurer? And is this a personal recommendation, if so?
Well, I think that's another very good question. And the answer is, if we agree that every contract of insurance is a new one, then I think it would be a very intelligent thing for the broker to do, to say, this is what we've done on the basis that your demands and needs are unchanged, but please check this and confirm that they are unchanged. And the point is, if the broker can genuinely say, actually, I wouldn't sell them anything different this year from last year, then that's great. There's lots of things
Roger,
you could
can I just add here that I think we need to look at this in parallel with the occasional wisdom of ensuring continuity with one insurer whenever possible. So it's one thing to rebroke, but it doesn't necessarily mean that even in the event of getting a lower premium elsewhere, that the cover should be switched, particularly with classes of insurance such as professional indemnity. Wherever possible, it's always better to try and get a good track record with one insurer and stick with them. So I think sometimes the statements of demands and needs could be qualified to say, yes, we've searched the market, but these are the results, but nevertheless, we recommend and suggest that you renew your existing policy.
Yeah, I think that's really good advice. I think one thing, again, I think the industry is missing a trick in not offering continuity loyalty. In other words, I mean, we've had long-term agreements, which are kind of continuity loyalty. We have no-claim bonuses, which are kind of, but I think that in general insurance, to try to engineer a way of saying, you stick with us, we'll stick with you, can't do any harm. But I'm sure there's other people who would radically disagree with me for various reasons. But I think from a customer point of view, it would do us a lot of good to show loyalty can pay. Can I just add something else before you go on, Carly?
Sure.
This is a really complicated subject, and if you read the demands and needs fact sheet that we've done, you'll find a lot more content than we've been able to give you in an hour. And I've already been asked by somebody in the industry whether we would be prepared to run this as a half-day seminar for people who really want to get into the weeds. And we would do that. I'm afraid we'd charge for it, but very happy to take this up because it is such an important subject. And if people say, well, look, we'd really like to spend half a day going into these things in more thorough detail, and I'd bring along an expert compliance person as well, so that we could look at both sides of the story. So if anybody's interested in that, just let us know and we'll make it happen. And the fact sheet will be available to you, and you can get it from our website. And I think that there'll be anybody who's attended this will almost certainly get a link to it from us within the next few days. So
yes.
I hope you've enjoyed that and look forward to seeing you at the next webinar.
Thank you. Thank you so much, both of you. As usual, tons of information. And yeah, we will make sure that we also put the link to the fact sheet on this webinar as well. So for anyone who's watching it on demand or who wants to take another look at this webinar too. But really just a huge thank you as usual, Roger and Michael, for delivering today all of the information. This session, as I just mentioned, is now available on demand, so do feel free to share it. Your CPD certificate, copy of the slides and all that kind of admin is available for you to download on this portal. But really just a big thank you to all the delegates as well for joining us today, and we will see you again soon with Flaxman. So thank you very much.
Bye-bye.